Hey traders, Dennis Orban, the AutoPilot trader. Did you know that most traders try to trade too many stocks? They're so unfocused, it's not even funny. If you're looking for a way to reduce the number of stocks that you're trading and also increase the probability that you're going to find the big winners, then today's session is for you. Share 2 tips on what to look for to grade out the stocks that you're looking at, so that you're only trading the top notch or the best stocks. Plus, I'm taking a look at 3 different stocks that could have the potential of running strong and hard through the end of the year. So with no further ado, let's jump into today's session of Trade Your Way to Wealth and Financial Freedom. Let's go right now. Good afternoon, everybody. This is Dennis Orban, the AutoPilot trader. Welcome to this session. This is our first live session in a while. Last week was recorded. I want to welcome everybody. Hope everything is going well with everybody. I had a really great Thanksgiving. And as I probably said in the intro, which I record the intro after we actually do the session, we've got a couple of things to introduce you to and show you. Hopefully that'll show you what you need to do to have a higher probability of success in your particular trading. And it's a very simple fix that I think you will find exceptionally useful. As I said earlier, I'm in the process of basically redoing how we do the Trade Your Way to Wealth and Financial Freedom. I want to know from you, this is a question, you can either send me an email or just lay in a comment in the chat box and or over on the YouTube channel in the chat box over there. What can I do differently in this webinar that will help you become a better trader? Just take some time, what can I do differently? And it may be, well, I won't put suggestions in your mind or biases, but you tell me, how can I help you become a better trader through what we offer in this video? One of the things I do want to do in this video webinar is I want to refine and keep our time down to about 15 minutes. And so that's going to require me to, I'm looking at a couple of things. One, Anil and Steve have been very gracious, and as I'm trying to work out what's going on, what I'll probably be doing is inviting them on for future sessions, but we're going to do it one co-host at a time, because we can get kind of lost in the weeds when there's multiples. And so again, my objective is to make it better for you guys. And so without any further ado, let's go ahead and jump over into the session. There's the disclaimer. It hasn't changed. So here's the tip for today, guys. And I will get right to it straight up off the bat. Winning principles to remember. 99% of the biggest winning stocks were above their 200-day moving average before their big move. 96% of winning stocks were above their 50-day moving average before their big move. So what is the lesson here for us to glean? Well, a major one, if you go back to what Mark Minervini says, Mark Minervini won't even trade a stock unless it's above its 200-day and 50-day moving average. Why? Well, it's a proven fact that those tend to be the more successful trades when price action is below the 50-day or the 200-day. The moves are much less predictable, and which means that, hey, you want to be very much watching out for those, because if it's below those levels, the sell-offs can happen really, 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 really fast. And so that's what we want to be taking a look at. So maybe you just need to have a simple rule going into 2023 that says, if my stock doesn't have, if the price action is not above the 200 or it's not above the 50-day moving average, I won't trade it until it reaches those criteria. So if it helps save you money in the long run, that's awesome. So let's go ahead and look at what's going on. I've kind of went flatline since around August, as you can see here. Still holding up very well, but I'm not, I'm up 36% for the year. We're beating the S&P by, this was as of 9 o'clock this morning, by about 51%. So I'm pleased with that. I still want to trigger and target through the end of December to get up into the 40% range. That is my target every year. Okay, let's go ahead and take a look at the charts. Let's go ahead and start with the S&P. A lot of stuff going on in the indexes today. We have a mixed bag. The Dow and the Dow, the S&P, the NASDAQ are all down. The Russell is up slightly. So, yeah, if you're over there on the YouTube channel, just let me know who's over there. I'd appreciate that. And if you do have any comments, please leave your comments over there. And so what do we see going on here? And I want to highlight a couple of different things here. Is this downtrend line is still very much in effect on the S&P. The S&P has gone up almost all the way to the downtrend line and then has rolled over. Now, how far is it going to fall from here? In order to avoid this uptrend that we see here, it's going to have to take out the uptrend line. That means falling probably below the 20-day moving average or even the 50-day moving average right here. Right now, and Mark, you asked a question a little bit earlier, does that apply, the 200-day and the 50-day moving average apply also to ETFs? And the answer to that is, yeah, it does. As long as it's below those. And so that's why we're in kind of a this mixed market here. Price actions have pushed above, in some cases, the 200-day moving average. However, that it hasn't done that on every one of the indexes. So here's what I'm doing with the spiders. The spider, it's got to take out the swing high here to be able to continue on. So I would anticipate, here's what I'm anticipating, a pullback probably back into the 20-day moving average or even the 50-day moving average. Those become your value zones or your value levels, where that's a high probability, low risk area to look for a potential swing trade at that point. And so we'll see what happens if prices get down to those levels. This big green candle here, that was the day that Jerome Powell gave his talk to the Brookings Institute, and we rallied. This rally was based off of one thing: the Fed saying they're going to raise rates less than what we anticipated they were going to raise rates. So that's one. Earlier in the week, we had the sell-off at the very beginning of the week that was China-driven. So we're in a very precarious news-driven market as it stands right now. I will go ahead and give us the rest of the indexes. Qs, what are we doing with the NASDAQ? NASDAQ is the weakest of the three tracking indexes that I track. It is well below the 200-day moving average, and we have a spinning top doji here at the top of the Keltner channel, and it may continue to drop back down. And it needs to, basically, this level right here at the 279 level needs to hold. And that's where I would anticipate somewhere between the 50-day moving average here at 280.248 and this lower level here at the 278.93 level. That's where I would anticipate the a bounce per se to be able to go on up and challenge the 200-day moving average and the downtrend line. Similar type situation. Here's the downtrend line. Same type of scenario, same type of interpretation. The Russell basically came up to the downtrend line here. It actually broke out of this more shallow downtrend line here and has popped back up. It stopped dead in the water with a resistance level up at about 189 right now. And as you can see, there on the Russell, there is no candlestick reversal signal. we're just at what we are was we're just at a level of resistance, and price action is kind of stalling out. Now it needs to take out the 8, the 20, the 50-day moving average to basically do a deeper pullback, maybe back to the 174 level. However, this is the strongest of the indexes. This is the strongest of the indexes to basically, and so I would anticipate a continuation at some point. But right now, I have no specific reversal signals up to the upside. Okay, let's go ahead. So that's what we've got with the Russell and are the indexes. Any questions? And thanks for all your input, everybody. I really appreciate that. And thanks for making it available for everybody, because that way I get a recording of that and it goes into my information to be able to address at a later time. Okay, well, that's what we've got with the Russell. What about stocks that we can be paying attention to next week? I like 3 of them. I like in phase. And you say with in phase, here's what I'd be looking at. Is we are getting a above average volume breakout right now. And so I would be anticipating the breakout area at the 324.61 level, a pullback towards that level. And that would give us an opportunity to jump on jump on a trade up to the upside on in phase. Number 2, Oxy. So Oxy, what I'm looking at, and this is Occidental Petroleum. What I'm looking for that is it has come down previously and found support at the 67.34 level. I'm anticipating it doing the same thing. However, if it doesn't, it's going to break and go ahead and fall down. But we're at pretty darn close to a level of strong, high probability, low risk area to look for an entry. I do not have to take it off the bounce here. I can also look for it to basically break out above that downtrend line right there. So again, I'm interested in this at 67.46. And then one that's really a surprise to me is, and it also shows the workings of the 200-day moving average, and that's Netflix. Be paying attention to any entity where it initially breaks below the 200-day moving average. Now, on 200-day moving average on Netflix would have been it breaking up here in this area about the 560 level. And I think we can roll that all the way over to about right there. As you can see, about 560 is where it broke the 200-day moving average and then fell from the sky after that. There's a couple of things, and then that made it basically non-tradable or favor a downside trade or a bearish trade. And then recently we broke out of the downtrend line, came back and retested back into the 200-day moving average, and now has broken out of this. So from a pure technical standpoint, Netflix looks like it is a buy, but it needs to be able to do a little bit of a pullback into the moving averages for that to take place. And so anyway, so that's the 3 stocks we have for you today. Any questions? How about over there on the YouTube channel? Any questions over there? Any stock? Okay, for everybody, I'll do 2 stocks chosen by the folks. So if you have a stock you want me to take a look at, hey, Warren.
Can you look at XPOF, XPOF?
XPOS?
OF as in Frank.
OF. Is it Exponential Fitness?
Yes.
Okay. Oh, what do we think about that? That is, and Nicole, was that you?
Yes.
Yeah. Okay. Yeah. Just taking a real quick look at this. There's one thing that just almost disqualifies this for me even taking a look at is the average volume is less than 200,000 shares. I like it to be at least 500,000 shares. Not knowing anything about this, I would have to do the market check or the stock checkup on it to find out what it looks like from a fundamental standpoint. It looks like, let me pop up one other chart here. It's always a good time this close to the beginning. It's a newer entity. And so it's gone up to 10, up to 27. That's a nice move. And now it's in the process of taking back off and climbing back up to these past highs. Again, I'd want to look at the stock checkup on it. But a couple of things that just takes my eye off of this particular chart is that it doesn't have a lot of good patterns. And when I say good patterns, nice pullbacks, and then it's a little bit haphazard in its formations. And then one more, KEWB. Okay, KWEB. This is another one I just spoke about. That's 200-day moving average. Yeah, what does this do, Barry? Chinese internet. Yeah. Just taking a look at what we've got going here. Like a lot of the other Chinese stocks, it is getting a reversal up here. It may go on up. I would want to run run it through the stock checkup to see if it's would be a opportunity. And it's got excellent volume. I mean, 24 million shares on a daily basis. That's significant. The thing that I want to take a look at from this run from here to here, it's about 73%. So it looks like it may be turning around, but this is this is a big loss here. I would anticipate, based on this huge loss here, that it's going to get up to about the 50% or around $40 to $45 and probably stall out at that point. Okay. Thank you very much for letting me show you a couple of stocks. Hey, if you are looking for a place to do your journaling, because we are getting close to the end of the year, and if you don't journal, it's a great time to start that habit. And my son developed this journal, the mini journal and the regular active trend trading journal. Excellent opportunity. Some of you all still do use these. It has a full size 8.5 by 11, and then a mini journal, which is a small, like a notebook size. And I'll put a link down in the description on where you can find those. It's one of the top sellers on Amazon. So with that, I just want to say thank you very much. Thanks for all the comments, everyone. I really appreciate that. And we will look forward to a really great week going forward. So thanks for joining us here. 2022, patience, persistence, and consistency. That's what we've achieved this year. What about 2023? Now's the time to put together your strategic plan or campaign for 2023. There are 251 trading days in 2023. How can you best invest your time so that you can generate more profits in 2023? So aloha, trade well, prosper, mahalo, and God bless. See you guys.